Welcome to the Real P&L Trading Show, where every week I show you my real accounts, each one tied to a specific trading system, so you can see exactly how each strategy performs in real time. I answer all your questions live, and I trade my safe wheel system right here on the live stream, so you can actually learn how to trade it by watching me do it. Now, when you hear me talk about the safe wheel, or the AMP 122, or the PL5, or the earnings edge, here's how they all fit together. The safe wheel. This is for anyone who wants to understand the AMP, the all market profit style trading in its most simplest form. And it shows you the core principles: be systematic, be hedged, and protect your capital. The AMP, this teaches you the actual framework behind all my systems, the book. And it's always hedged, always non-directional, and always rules based. And this is the blueprint for everything that's built on, this book, the All Market Profits Framework. And then I have my PL5 or PL5 Pro. This is the professional, fully developed version of that framework. It's the advanced rules-based system for traders with meaningful capital who want consistent risk-adjusted returns and lower drawdowns. And finally, the earnings edge. This still follows the AMP framework. It's just applied in a faster, earnings-focused way that uses discounted options for controlled leverage. And you might see something different going on today in the live stream. I have my daughter with me, Avery. We don't really have any plans with her. We just want to get her involved. So I'm sure that she'll have some things to say as we move forward. She has been trading with me since 2016. Every week, twice a week, we've been meeting. And obviously recently more often, since she helps with a lot of the back end and a lot of the customer support, and she understands the trade systems.
Hello, everybody. Hopefully my lighting and settings improve over time. So
yeah, don't worry about that. All right, so I want to make sure that my audio is good. Good, Will, thank you. And obviously my video is good because you guys are letting me know in the feedback. Okay, so let's talk about first the earnings edge. You can see my account right here, and you can see so far how the earnings edge is done in 2026. I'm up $3,438. See, my net lick is 28,669. Let's kind of look at that from a spreadsheet point of view to kind of give us a better look. The last trade I traded was Robinhood. I made $1,078 profit. And since I've updated to the 3.0, my record is 25 wins, 5 losses, 1 break even at an 80.65% win rate. Now, looking at the earnings edge from 2022, you can see I did 63%, market was down 20. In 2023, I did 17%, market was up 24. In 2024, it's down 36%, market was up 23. That's when we started looking at an alternative and an update to the system. Avery, you got involved with that pretty heavily, and you started throwing out some ideas and doing some back tests and things like that. And we got up into the 3.0, and you can see in 2025, we did 321%. And the market was up 16.5. And so far this year, this number 28,669, that is my current net lick. I'm up about 12.4% this year. And let's see what SPY is trading. SPY is trading at 692.37. 692.37. So the market's up 1.5% this year. And you can see overall since the beginning, since I started trading the system in 2022, I'm up 473%. Market's up about 46%. Okay, so that is the earnings edge. Let me go into the next thing, the PL5 Pro. This is also a 3.0 strategy, and let's take a look at what the net lick is. You can see last week it was 472,869. And let's see what it is this week. And I'm going to go into 527. This should be, okay, 481,539. 481,539. 481,539. So you can see I'm up pretty good from last week. Now looking at this PL5 Pro, I started this on June 1st, 2025. That's when I did the 3.0 update. I started with about $406,000. By the end of the year, I was up to 470. I was up 16%. The market was up 16% also. So I could have just gone long the market there, got the same results. But the problem is I wouldn't have been hedged. Then in 2026, you can see that I'm actually up 2.34%, outperforming the market up 1.53, overall up 18.7 versus 17.8. So I'm running pretty consistent with the market right now. And mainly that's because, we're in a bull market. So in a bull market, if we can keep up with this system, we do quite well. And then when the market goes sideways or goes down, we do much better. Avery, any takeaway on that?
It is what it is.
So yeah, basically though, when we talk about when you've done a lot of back tests on this, and when the market goes sideways or it grinds down or it crashes, we outperform the market pretty well. And then when the market goes up, we typically sometimes we underperform.
I guess what I've been thinking is the market has been kind of moving kind of a lot, this way up, all the way down, this way up. So it's going kind of sideways, but in extreme movements. So like 1% up, 2% down, back to 2% up. So it's kind of just moving a little bit sideways right now, but in a very extreme manner. So that's been working out pretty well for us with the PL5.
Yeah, I mean, you can see we're up, outperforming the market so far this year. And I think that's because we came into a sideways market, right?
Yeah.
Because initially we were in just a total bull market and we were underperforming a little bit. But once we kind of had a little bit of a sideways action over the last week or so, that's when we start outperforming. All right, let's look at the PL5 variant, the S&P variant. Now, this is where I use my Interactive Brokers account. I can't show you the whole screen because it'll show my account number, but you can see 37,731. 37,731, so I'm up from last week. 37,731. Whoops. 37,731. Okay, so with this, I started July 16, 2024, started with $30,000. And the last half of 2024 outperformed nicely, up 10.2. Market was up about 4%. Then in 2025, did about 12%. Market's up 16.47. And so far this year to date, up 1.96. The market's up 1.53. So kind of staying with the market here. But since I started implementing this program in the middle of 2024, I'm up 25.7. The market's up 21. So outperforming there. Now on a risk-adjusted basis, these will draw down together. On a risk-adjusted basis with a PL5 Pro, which is not tied to the S&P, I get about half the drawdowns of the market. Okay, so now let's talk about the safe wheel. And first thing I'm going to do is take a look at the account to see what the net lick is. I think on the safe wheel we're up pretty good this year. I think it's this account here, 6290. So let's bring that in, 6290. See if we're up a little bit from last week. So with the safe wheel, and this is if you're interested in the safe wheel, there's a link in the description, and right now it is available for free. What's in that safe wheel, Avery? We've got the flow chart.
So there's a course, flow chart, alerts, and a community as well. So.
Yeah, so we got all of that, and it's for free. So in 2022, safe wheel did about 22%. Market was down about 20. In 2023, 5.39. Market's up 24. In 2024, minus 14%. The market was up 23. I think that's our lowest drawdown that we've seen with this system, because it only draws down about half as much as the S&P. And then in 2026, we're doing quite well. We're up 8.75%. Market's up 1.5. So we're vastly outperforming this year to date. So the safe wheel is doing quite well. And on a risk-adjusted basis, we're still underperforming a little bit at 25.8 versus 47, 46% since 2022. But again, this is a great learning tool on how to apply the AMP, the All Markets Profits framework. And it's not very risky. And you can learn how to trade the wheel safely because maybe there's a lot of people that have been trading the wheel. Here's the thing about the wheel. It will work, especially when you initially start trading it. And then after a year or maybe 2 years, you eventually end up with losers in your portfolio. unless you cut your losses, of course. But if you don't cut your losses, you're just going to end up with all losers. And then eventually the best thing to do is just cut everything and start all over, because the wheel really works well in those initial time frames, that first month, first 3 months, the first 6 months, the first year maybe. But eventually, if you don't take losses with the wheel, you're going to end up with you're just filtering and filtering until you find losers, and then you just have all losers in your portfolio. So the wheel looks great for a year or two, but eventually it falters. And that's kind of the downside of the wheel. But if you have the safe wheel, you're hedged and you're good all the time. You're not worried about downside, because, for example, SoFi's been going down pretty significantly.
Yeah, year to date, it's actually down 23%. So
wow,
if you
okay.
bought in at the first day of the year, SoFi, you'd be down pretty good. But with the safe wheel, we're actually looking pretty nice.
Yeah, we're up, like I said, almost 9%. So on this, the first thing I'm looking at here is, does my hedge pay off? Because it's not going to pay off here. So I just, that's one of the things. But let's go ahead and manage this. So I'm going to manage this thing. The first thing I look at here is I've got my long call that I put on every Friday, and I pay $5 for it. Okay, so other than my long calls that I put on Fridays, you've seen every single trade that I've made here live since 2022 in this account. Now we talk about the put hedge here. There's 3 questions. Number 1, is this 100 days or less, because it'll be depreciating too fast? The answer is no. Anytime it's a no, we just move forward. There's no trigger. Is the 22 strike close enough within 70% of the actual price? Well, that's actually in the money. So obviously the answer is yes, because SoFi is trading at 21 and we're at the 22. So this hedge is protecting us nicely. As you can see, the hedge, here's how much we're down. We're down $440 on the 200 shares, and the hedge is up about $408. Wow. So the hedge is doing well. Yes?
I was just saying, wow, the put hedge is doing its job.
Yep, definitely doing its job there. And remember, yeah, we're down $40 here, but we've been collecting premium every week. We're collecting, right? Okay, and so the third question is, does the put hedge pay off? And the answer is no. Because let's say that this was $470, right? Then it would be worth more than this. So that would trigger me to go ahead and use this hedge, take this whole thing off and start over. But it's not paid off quite yet. And the further that SoFi goes down, the more that this, the higher probability that this thing is going to pay off. But that's fine. We're just going to be collecting more premium. Okay, so there's nothing to do with any of the hedges. They're all good. So we're going to run the traditional wheel. Now, I have written down here where I got assigned, okay? Because I got assigned on SoFi at the 24.50 strike, and I got assigned at the $22 strike. So I'm going to look at those individually, and I'm going to look to trade them. So I'm going to go into the nearest expiration, and I want to write a covered call, right? Well, first I want to write a covered call at 24.50 or higher. I can't do that because I cannot collect at least, say, 22, 23 cents. So there's not enough premium here. But the 22, maybe there is. Yeah, okay, so at the 22 strike, I can collect at least that 22 cents. So there is enough premium. I could sell this. So what I'd like to do is just go one back as long as it's still out of the money. So I'm going to sell this 21.50. Oh, I'm sorry. I can't sell it out of the money there. I'm going to stay at the 22. I have to be at the 22 or more or higher, or else I'll take a loss on the share. So I'm going to stay at this 22 level, and I'm going to sell one covered call, and I'm probably going to get 25 cents, and it's going to expire at the end of the week, or it's going to call me out of my shares, one or the other, which is fine. If I get called away, basically I keep this $25 premium plus all the other premium that I've made selling against this position, and I just broke even on the shares, but I sold a bunch of premium against it. So I'm able to write one covered call. It would be nice if I could write 2 covered calls, but SoFi is too low. It's not close enough to 24.50 to write another covered call on my other position. So I was only able to write a covered call on my my position where I was assigned at $22, and I was able to collect about 25 bucks there.
I think
All right.
people were speculating that we might do a blaze of glory trade today, but looks like you were able to pull through with a covered call.
Yeah, because the blaze of glory would have been if I could not collect enough premium even at the 22. So then I would just go in and just sell at the money and do a blaze of glory trade and probably get called out of my shares. But because I've been collecting premium this whole time, even with SoFi going down, how often can you make money on the wheel strategy when the stock that you're wheeling goes down? How much, Avery? 20.
So it's down about a little over 23% year to date.
So stock down 23%, and we're still making money with it on the wheel.
Yep.
So if you were running the regular wheel, you'd probably be down 20 something percent right now, or 15% because you collected some premium, and you'd be stuck there hoping that it comes back. Okay, let me take a look at what's going on here. Will says audio's good, thank you. And it's the Karl and Avery show. Yeah.
By the way, hit the like button if you're enjoying my presence.
And if you're not enjoying it, hit the dislike button.
Hey, just interact either way. Thumbs down, thumbs up, whatever.
So the first question that comes up is Avery being groomed to inherit the trading empire? She's being groomed to provide content for the empire, yes.
Yep.
Some guy, good morning, how you doing? Will is talking about his cheap put paid me off pretty well last week. Oh yeah, that's right, you were buying a put instead of a call. He sold it early and bought this week's on Thursday. Do you ever recommend selling early? I personally I don't have a recommendation on that, because the only reason why I don't sell early is because I don't really look at my account but once a week. So if you're constantly monitoring it and you see this, my long call becomes worth, a significant amount of money, I don't have any issues with taking those profits. I just don't do it because I just don't even look at it until Friday, till the end of the week. But holding till Friday has its advantages, because maybe it's going to go up significantly at that point, and then it's time to buy a new long call, and so you don't want to really overpay for that. So if you buy and sell at the same time, you're probably doing pretty good in terms of not getting beat up, because maybe you sold your long call too early and now you got to buy another long call and it's way far out of the money.
Well, can I add to this a little bit? Firstly, I don't trade the safe wheel, so take with a grain of salt. But Dad, you like to come in, maybe 30 minutes before the market closes. So you're at a point where there's been a lot of theta decay. So maybe it does work well if maybe you come in on Thursday, but then there's always that time where Fridays is where there's a lot of movement in that stock. And you've been able to still, Dad, take a lot of nice profits on your long calls, regardless of that theta decay scenario. So
yeah, so thinking about it from that point of view, the theta decay scenario, yeah, obviously at that point it is kind of better to sell on that Thursday,
but not every time.
Yeah, just from that point of view. So there's always pluses and minuses of it. My plus and minus is that I just want to trade one time on Friday and one time on Monday. So it's kind of more of, I'm going to build my lifestyle around my trading. My trading is going to be built around my life rather than my life being built around my trading. That's kind of the way that I like to build my systems. Let's see. GH says, Safe Wheel Tier 2. Am I correct that I am not supposed to buy 3 additional puts for additional hedge on the second tier? You are correct. You already have your hedge. When you initially buy those 3 long puts, that's it. You're not buying any more put hedges. You're done at that point. So even if you open up tier 2, you don't add any hedges or anything like that. Let's see. Seems like if the tier 2 short put gets assigned, I would be under hedged. Well, am I under hedged now? I'm up $400 and I'm down $436. I mean, it's close, right? But I wouldn't call that under hedged though, especially since I've been collecting premium all the whole time that we've been running through this cycle. Will says, is a blaze of glory coming? No, not quite. I was able to sell some premium. Scott says, I find that a down market with a safe wheel is the best case scenario. So far, I mean, it looks like that with the way that we're going this month, it's performing pretty well. And like you said, say SoFi down 23% year to date. Yeah, down market when you open really helps with the safe wheel. Yep. Will says, with our two soldiers right now, a sharp jump would really be good unless you're in the blaze of glory. Yeah, so I'm not in the blaze of glory, and I was only able to sell against 100 of my shares. So I'm actually long 100 shares without any kind of cap right now. So that's another way that the safe wheel could really come out ahead. If SoFi jumps to, say, $24 next week, I've got 100 shares that's not capped. So that's another good thing about the safe wheel, is that sometimes you don't sell premium, you just own the shares and you don't cap your upside. Scott says, how about if you just take the covered call out in time until you can get the 1%? Take the covered call out. Oh, do you mean just hold and just kind of hang out and not collect any premium? That was originally how the safe wheel worked. And I did some more back testing, and I found it's better to just do the blaze of glory and just sell at the money and just collect what you can and just go out with a bang, even though, in other words, you could lose on your shares with the blaze of glory trade rather than holding them and hoping. I don't like to do that. So I like to collect premium every week. So that is kind of getting away from the traditional wheel, because we're not holding and hoping, never, with the safe wheel. Yes, so yeah, I think you're just saying the same thing. How about if you just take the one covered call out until you can get 1% on it? Yeah, exactly. So that's holding and hoping. I try to avoid that, and that's one of the downsides to the wheel strategy. And I've with the safe wheel, we've pretty much eliminated that aspect of the wheel. Avery telling us to like is 85% of her job.
I wish it was that.
Yeah. Cyberjam says, if we wanted to get into the safe wheel, is it a good time to get on SoFi? Yes and no. I mean, I typically like to see the stock between 22 and 38, and right now it's at 21. I wouldn't, so it would, but technically, because it's not under 20, yeah, you could get into it. Less is more says, welcome to Avery.
Hello.
Cam says, how to buy your book. So there's a link in the description, and the link not only has the safe wheel, the free, for free, the whole course, it also has a link to my book there. Neil says, when determining whether or not your hedge is profitable when you have 200 shares, do you consider the money you collected? No, I don't. Or your weekly trades to make that determination. No, I'm not considering the collected premium. I'm only looking at these two numbers right here and making my determination. So you can see I'm down about $20 on the hedge. So the hedge is about $20 away from, being able to pay off. And I'm not going to look at this again. I've already made my decision. Even if this went higher and this went lower, I would not do anything. I've already decided. And then next week I'll come in and take a look at that again. Kitch, in your presentation last week, you had big loss on the trade with Costco. I think I took a 2K loss. No, that I haven't taken a 2K loss on Costco. The highest loss that I've taken since the beginning of 2025 is $1,400 and something on Visa. And then I think the next highest loss was around $985. So those are my two biggest losses with the earnings edge in the last over a year. So Costco, I did not take a loss, and I don't have a 2K loss in any of my trades. But if you want to talk about what went wrong there, I'm assuming you're talking about the earnings edge. So basically what we're doing is we're buying options at a discount. We're buying leverage at a discount, okay? So which means that if the stock moves a normal move that they're expected to move, or even a little less sometimes, we're profitable because we're underpaying. But there's times where it doesn't move at all. The stock just doesn't move. It just stays there. And that's when we take losses, which very rarely, well, only happens about 20% of the time when you look at my statistics. And the losses have been smaller than the gains too. Let's look at those stats. Yeah, so my average loss has been $611, average gain 1,092, and I've got 25 wins and only 5 losses. So my losses are smaller in terms of how much, and they're also smaller in terms of statistically how often they occur. But Costco, no, I don't have a loss on Costco since the beginning of 2025. GH says, nice, thank you. I see you were in the exact position of my question, and your original hedge is perfectly fine. Glad I didn't buy more puts on Friday. Me too. So with the safe wheel, I'm assuming you have the course and the what you call it, what is it called, Avery? The thing that you follow, the flow chart.
Flow chart.
The flow chart tell you exactly what to do, and the flow chart never says in tier 2 to purchase more puts. Gene says, what's the Blaze of Glory trade? That would be when I would be stuck. Let's say that I couldn't sell any premium because there wasn't enough premium. I'm long 200 shares and I cannot sell any premium or covered calls against any of my positions because the premium's not high enough. It's got to be at least 1%. So it's got to be at least like 22 cents, 23 cents. And if it's, let's say that it was only 15 cents, I would be in a position where I would not be able to sell any premium against my long shares. So I could hold and hope, or I can just do a Blaze of Glory trade, which means I would sell at the money, and I would sell covered calls against 200 of my shares. I would sell, and because I'm going to go out with a Blaze of Glory, I'm probably going to get called away on my 200 shares at a loss, right? But I might take a loss on the shares, but I've collected so much premium along the way that I'm going to come out ahead. Will says, for newer viewers, you offered the Safe Wheel course for free. What's the one key lesson from it that ties all your systems, like the PL5 and the earnings edge and the hedging in together? Well, what really, it's the AMP, the All Market Profits Framework, which means that we're always hedged, we're non-directional, we're rules-based, and we're collecting premium and consistent profitability. That is the structure of everything, and that Safe Wheel, it does that, and also the PL5 Pro, the PL5 does that, and the Earnings Edge does that in a little bit of a different way. So it's non-directional, it's hedged, it's black and white rules. Those things all are the only way that I trade, and I trade 3 systems like that, and one of them I give away for free. Ryan says, I think the user was asking if it makes sense, I guess, to increase the DTE on the sold covered calls, to get sold premium to the 1%. I see what you're saying. So in other words, should I go out to next week so I can get enough premium to make this work and not have to do the Blaze of Glory? I like the idea. And it needs to be back tested, and it totally could work, and maybe that is a system that would work.
Yeah, I think we've had a similar question before, just about going further out in time and trading the wheel, instead of doing it every week, maybe every 2 weeks or every month. And I think your response was simply just, this is how you do it, this is your schedule, and you like trading it once a week. But yeah, I guess there's no reason why it wouldn't work, if you did it further out in time. guess the only downside could potentially be, of course, there's more time for things to not go your way, I guess. So
Yeah, and the other thing is, again, I build my trading systems around my schedule. And my schedule is to look at this thing and make decisions once a week. And so because of that aspect of it, I would not, me personally, I would not go out further, but I don't really have anything against that. But make sure you back test it first before you do anything or make any changes, because this system's been fully back tested and forward tested. It's already been proven to do what it does. And so if you're going to make a tweak, which is not a bad idea, just back test it first is my recommendation. All right. And GH was I was trying to get the words out. Flowchart. Yes, flowchart. And Will says, great new format. Okay, Will, have a good week. So he likes that you're here, Avery.
thanks, Will.
Creed, first time joining live, learning the safe wheel. Appreciate the knowledge. I appreciate you coming in, Creed. Will says, you would get less money over for more time, right? Like even if it's more premium, you divide it by 2 and you know the premium you're getting per week. So yeah, you would probably get a lower amount of premium because of the last 7 days, you're probably going to get a lot more theta
Right.
per day kind of a
It's
thing.
always a give and take scenario, right?
Yeah. And Kadar says, hello, sir. How you doing? Did you ever hear about Iron Condor nest strategy? I don't think I have heard that. I don't think I've heard of it.
Yeah, I'm not familiar. I know the Iron Condor, but I don't know anything about a nest.
Nest. Yeah, I don't know what the nest aspect of that is.
Yeah.
Happy Tannenbaum. Bannon. How much capital for the PL5? 120,000 minimum is what we recommend for the PL5 Pro. Now the PL5, the variant that I'm running, you can run it as low as $35,000 if you want to run the PL5. Even the PL5 Pro, you can run it with as low as $35,000. But then you're kind of looking at, sometimes when you start running into those lower capital situations, you run into commissions starting to kind of eat you up because you're using ES and futures on ES. And if you use Schwab, you're paying a lot. So that's why I moved over to IB. And so you know, there's different ways to do it when you have less capital. It just makes you have to jump through more hoops when you use less capital.
It's almost like you have to overly consider the small details like commissions when you're trading on ES with a low minimum capital. So
yeah, with a PL5 or the PL5 Pro. Okay, Kidar says he likes the strategy on the Iron Condor. He can give you the information. Check it out. Yeah, just email support@real-pl, and you know we'll take a look.
I'll check it out.
I'm always interested in new concepts. So yeah, appreciate that. Okay, well, this is our first time with Avery here, and I appreciate you guys.
Like I said, if you enjoyed it, hit the like button.
Yeah, appreciate it. I would appreciate it if you hit the like button. And we're going to try to get Avery on here more often. And in parting, I'd like to say, if the P&L is not real, what else are they trying to conceal? Okay, we'll be back next week. I appreciate you guys.
See ya.